Welcome. It's an opportunity now to take a look at a technical analysis tool which not very many clients use on our platform, but it is readily available. It's the Williams %R, which is an interesting indicator. It appears at the bottom of a chart. It's an oscillator. Brian Noble joins us now from TradeEnable.com, who's an exponent of this. Actually uses quite a lot, don't you? What is it exactly, Williams %R?
It's basically a sentiment index. It runs between 0 and minus 100. When we're up at 0, the market is overbought. When we're down there, minus 100, the market is oversold. So it's one of the first indicators that I check every day, and I'd use it in conjunction with a couple of other indicators, like the McClellan oscillator, which measures the breadth on the market, and the fear and greed index, which comes out on the CNN money website. And those three things are so important when you're trying to anticipate when you're going to get a bottom or a major top in the markets. And I know when we look at the left hand side of charts, we're all geniuses and we can all anticipate it. It's try to anticipate the right hand side, but I find these indicators, when they're used properly, and I use them on my Trader Noble website all the time, they can give you a really good edge in the market.
Okay, well, the McClellan oscillator doesn't appear on Pro Real Time, which is what we're going to use now. So let's bring up a chart of the S&P 500 and look at the Williams %R. Explain your ideas through this chart here. We were talking before we went to air about these peaks and troughs that occur here. Now, as you said, it goes from 0 at the top to a negative 100 at the bottom. And also on here, on the standard Williams %R, which on this day is a 14-day period moving oscillator, you've got this line here at the top, which is the negative 20, and this line here at the bottom, which is the negative 80, upon which we then get these different colours, the green at the bottom and the red at the top. Bearing in mind what you just said, explain how you use this in conjunction with the price action on which you have a Bollinger Band. Okay,
we're looking at the S&P here. Let's again, I'm going to re-emphasise, at the left-hand side of charts, we're all geniuses. Yeah. But if you go back to June, August and October for 2019, every time we got into that green shade on the on the Williams index, when it got below 80, I prefer when it's below 90. And each time then I check the daily Bollinger Band, and if we're outside the bottom of the daily Bollinger Band and we've got the green shade with a reading of minus 90, preferably minus 95 to even up to minus 100, then I'm going to buy this market with a wider stop. I'll also bring in the McClellan oscillator. That's a reading that goes from plus 250 to minus 250. It is very, very rare that gets below minus 250. It happens maybe 2 or 3 times a year. Inevitably, it happens when you have the Williams index at almost minus 100, and with a particular contract that you're trading is outside the bottom of its daily Bollinger Band in the US stock market, and then I will be a very aggressive buyer. It might take a week or two to come right, but it stops you selling markets when you shouldn't sell them.
Talking about the bottom of the Bollinger Band, when you disappear at the bottom, on this chart here on the S&P 500, we've got this market disappearing out of the bottom, that low that many people talk about at the back end of December 2018, before we had this 30% rise. But you can see here these points at which we saw the Bollinger Band broken at the bottom here, and you can see it does coincide, as you've said, with these green peaks down here. But we get a lot of red peaks, and there's an opportunity here to sell, but we don't go outside the top of the Bollinger Band nearly as much. Why not? And what gives you the indication that there's an opportunity here to sell? I'm thinking here particularly around October, when we were very much overbought. We were over the negative 20, where we had this red area here, but the market continued to rise. Now that to me shows that it doesn't work all the time.
No, but we had, it's much harder picking a top than a bottom, because you've got the central banks who don't want the stock market to fall. They're doing everything they can to keep the whole system going together. We've had the longest bull run in the history of the stock market, as we know. But there's still plenty of opportunities when we get to the top of the Williams index, and we're at the top of the daily Bollinger Band. And at the time, when you're looking back in history, we're not outside the top of the band, because the band just moves. But if you go back to last Thursday, the S&P closed at all-time highs. We're almost at the top of the Williams index. Interesting, the McClellan oscillator is only barely in positive territory, and that should be plus 250 overbought, given how overbought the stock market, and it's not. And it's another worrying sign to say this market may be rolling over, but it's much harder for a market to roll over on the top than it is on the bottom. But the incidents that you pointed out there, going back to 3 or 4 sell-offs that we've had this year, have been vicious, especially the August one, when the stock market fell 15% in the first 2 weeks in August when most European traders were on holidays. So, and again, the Williams Index would have given you the signal to go short, gave you a short in October. If you go back to the sell-off that we had on the 3rd of December, it was a 2-day wonder. S&P fell 60 points and reversed. We thought we were going to have a key week reversal to the downside, and by the end of the week the market closed higher than the previous week, which was amazing. So it just shows you the level of intervention allegedly in the markets.
Yeah. Let me just quickly catch up on this most recent part of this chart here. Now, this happens to be the S&P 500, and we're talking here about the last couple of trading sessions around the first weekend of 2020. We've only dropped a small amount in terms of the price action, but this is what appears to be a relatively large move on the downside in the Williams percent R. How do you read this? Are you concerned about this? Does this indicate to you something unusual is going to happen, or does it not mean anything? The fact that we've got this, what appears to be, to me at least, is a big negative divergence over price action.
Yeah, well, I mean, the S&P still fell. You know, it's fallen almost 50 points from the high on Thursday. Funnily enough, the Williams index has fallen 50 points as well. So we're trading right bang in the middle here at 51. So
right.
if the market suddenly get a V bottom here, then that'll indicate in the Williams index that the S&P is going to go back up again. I think, you know, going away from the two indicators, as long as this S&P can hold above 3195, and if we do go down and test that low, then this Williams index will definitely be sub 80 at that stage. Then you're on the lookout then to buy the market again. You know, it's incredible. I was looking at the DAX chart myself today, and the DAX chart went from almost all-time highs on Thursday, the top of the Williams index, top of the Bollinger Band, and then the DAX fell 500 points between Thursday and today, and now we're at the bottom of the Bollinger Band after a 2-day movement. So it's amazing how fast these things can happen. You know?
Let me just bring up one more chart that we talked about, and this is sterling against the US dollar cable. Explain what's happening here and how you're trading this and the moves that we've seen in the Williams percent R.
Well, obviously everyone was so bearish for the best part of 2019 with all the Brexit talk. Will it happen? Will it not happen? With Johnson losing all the votes, etc., etc. But every time we got to the bottom of the Bollinger Band, we were at the bottom of the Williams Index. And when we got that spike, the market turned each time, and especially when we hit the low 119, the market just didn't want to know every time we got down there. If you go back to, if you see on the chart there, when after the election, when Johnson romped home, the cable spiked to 135.5. It's way above the Bollinger Band. It's up near zero on the Williams Index, and then we had that little rounded move, quick sharp move lower, and then cable went all the way back down to sub 130 again on the back of it. So these things are fantastic signals, and you know, if we don't quite get to the bottom of the Williams Index, and the market starts to turn, like we've seen in cable there when it hit the green line on the moving average, you know, we have that V on the Williams Index and the V on the off that green support at 129.90, and then the markets have gone up, you know, 200 points up to today, helped obviously by better economic data. But the great thing about these indicators, you don't know what's going to come out. Nobody knew that Trump was going to send the bombs into Iran on Friday, but the market was telling you. And another indicator I use, which really well, is the fear and greed index. Yeah. And the fear and greed index, I have never seen a reading of extreme greed at 97 as we closed on Thursday. Even on Friday, despite the sell-off, we still closed at 94. If I go back to Boxing Day 2018, we closed with an extreme fear of 4, and the S&P rallied 30% in between, and the Williams Index had all of that for all of that rally.
Just away from the charts, just very quickly, round us off on this. You did reference stops very briefly. Whereabouts would you put a stop loss when you get to the extremes of the Bollinger Band and the extremes of the Williams percent R? Are you very tightly stopped on these extremes?
I would trade in a small size. I'm looking for a big move, and I'd have a wider stop. And then once the trade starts to work for me, then I'd add into the position, and then I'll tighten my stop up to whatever low or high. If you're selling the market, whatever previous high was put in. So, for example, if you're selling the S&P now, and we get a retracement back, 32.58 was the previous all-time high. So that's where your stop is going to be there. If you're buying the market at the moment, then you're going to look at the low we've had so far in this move is around 32.06 just in the last couple of days. So if you're buying the S&P S&P, you'd leave a stop around 31.95. So it's actually a cheap trade to be able to do it.
Okay, all right, Brian, thanks indeed for dropping by, talking to us about how Brian Noble uses the Williams percent R. Brian did reference the McClellan oscillator and the Fear and Greed Index, neither of which appear on Pro Real Time. But you can catch up with Brian on his website if you want for more information about the Williams percent R and how he uses it in his daily trading.